Stablecoins are under the spotlight. Following the collapse of UST, an algorithmic stablecoin, nobody wants to touch algorithmic stablecoins anymore. But there is one project which has held its peg through all the drama. I am, of course, talking about Frax, the fractionally algorithmically backed stablecoin. Some of it's true collateral, fully backed, some of it's algorithmically backed, and as the price of Frax, the native token, drops and moves around, that rebalances and keeps the peg in place. And it's done it really, really well. Now today, I'm very excited to be talking to the founder of Frax, Sam Kazemian, who has history with Everpedia. When you Google Sam, you're confronted by a figure of startling muscularity. But when you speak to Sam, you're struck by someone who really has his finger on the pulse of what it's going to take to make an algorithmic stablecoin really a proposition that can function in all conditions. We've spoken to the team at Gyroscope before, but this is a fascinating insight into what it's going to take to make Frax profitable, how to create velocity, and maintain that all-important peg when everything seems to be collapsing into dust. It really was a fascinating conversation.
Do you know how much money you made in DeFi? Valk introduces Merlin, your institutional-grade DeFi portfolio tracker. Simply connect your wallets and access your net worth, yield earned, P&L, total debts, transaction fees for each of your historical positions in USD. From lending on Ava or Trader Joe to getting a full overview of your LP positions on Uniswap v3. Make smarter DeFi trading decisions with Merlin. Sign up now for early access before the public launch on July the 1st. Link in the description. In 2021, Ethereum traders lost over $200 million to malicious bots exploiting their trades. As DeFi continues to gain popularity, this number is expected to rise. Eden Network is a next-generation private transaction service for Ethereum, providing traders with MEV protection by submitting transactions directly to miners and away from the prying eyes of harmful bots. Using Eden Network for Ethereum transactions results in better and safer trades. Eden Network recently launched Eden Rocket RPC, which compiles some of Ethereum's fastest private transaction networks, resulting in 90% plus effective hash rate. This makes Eden Rocket RPC the fastest private transaction network available, protecting you from bots. Join the best and get started with Eden Network today and trade safer. Is your crypto sitting idle without earning you any passive income? On Nexo, you can maximize the value of your crypto in no time and earn rates of up to 17%. Their web platform and mobile app are super easy to use. You can buy crypto with your card instantly and start earning interest paid out daily. The Nexo exchange has over 300 market pairs. Every time you swap or buy crypto, you get up to 0.5% cashback that's automatically added to your wallet. If you want to finance buying a car or a trip to a faraway place, you can borrow cash by using your crypto or NFT as collateral. You don't lose your crypto, and you can get borrowing rates as low as 0% APR. Go to nexo.io and get started today.
So Sam, welcome. It's been, I guess, probably amongst the hardest kind of few weeks that you've probably had in this space the last month or so. How has it been?
Yeah, thanks for having me. It indeed has. I've been in the space for a while, actually, since 2013-ish. And I think running a DeFi protocol, especially a stablecoin, is basically playing crypto on hard mode or very hard mode recently. But things have been good at Frax. Obviously, everything has been brutal for all tokens, right? A lot of stablecoin pegs, as everyone knows by now, but just overall, even macro, right? Like stocks, right? If you look at, US or international tech stocks, growth stocks, just it's a bear market in terms of growth and risk assets in every category. So definitely been an extremely tough macroeconomic situation.
Yeah, and it's ironic, isn't it? Because we talk about stablecoins as being the asset you go to when you are looking to risk off. But now suddenly they've been tainted with this brush that they simply cannot function and they simply cannot work. And so the contagion from the fallout of UST is now infecting the confidence that anyone might have in anything that isn't 100% fully backed by a single US dollar to a dollar-backed stablecoin. So how have you managed to navigate all of that since Terra collapsed?
Yeah, that's a good question, because there's kind of two things about it. One is, I always said this when we started Frax, actually, which is actually about 17 months old. So it's still pretty new in terms of stablecoin or blue chip DeFi protocols in general. But I always said starting a stablecoin is so incredibly hard, because just like you're mentioning, you basically spend all your time stabilizing this token at $1, right? Hoping that when there is exactly a time where people need to go into $1, right? Use a stable coin, right? Flight to safety, then you will, finally have use for your product, which is a stable coin, right? So that people will actually come into your stablecoin. Except the reality of starting a stablecoin, which starts with zero Lindy effect, zero confidence, zero reputation and stuff, is that you spend all this effort, this capital, this backing and stuff to stabilize a token $1. But then when people actually want $1, what they do is they actually dump your coin. They actually dump your stablecoin, right, for the most safest that basically you can get, which is currently in the industry consensus USDC, right? So when we started Frax, the thing that we always wanted to make sure is we have always a perfect peg, which thankfully we've been able to keep in our 17 months. And we're always building Lindy effect so that we're not playing this game of like catch up of, you're trying to build a stable coin, and then right when everyone wants a stable coin, they won't use yours, because then it's pointless. Then it's like, what are you doing, right? You want people to actually stay in your stable coin when there's a flight to safety. And one of the things that we're proud of is, for example, during this whole last month of May, where multiple stable coins lost their peg, I think it was USDN. There was a few others. Obviously, Terra is the huge, implosion. There was a time where I think it was the week of like May 12th or 11th, which was when things were like really bad. There was a time where basically, other than the fiat coins, and even Tether was having a hard time, Frax and DAI on Curve and on Uniswap and on-chain liquidity were doing just fine. And that was something we were really, really proud of. If you go and look at the historical performance of Frax's Curve pool and the Uniswap liquidity and everything, we were right on it. And so we're really proud of that. And I think that's how you create value, right? That Lindy effect, that reputation, that the fact that people know now that, okay, they've survived every single thing. The only way you can get to, real use as money as people see that history and they're like, okay, I feel fine, right? Like, here's another market dump. I'm going to stay in Frax. I'm going to stay in DAI. I'm going to stay in USDC, and I'm going to keep earning, yield whatever you're doing with the stable coin, whether you're lending USDC or you're staking Frax or you're, putting DAI in Curve or something like that.
Yeah, you've set up a lot of interesting talking points there, but you mentioned Lindy effect 3 separate times there. It's clearly something you've thought about and that you probably obsess about, is the resilience of your protocol, which can only be acquired over time. What is it about the Lindy effect that seems to be so compelling for you and so necessary for you?
Yeah, I think it's one of the most important hallmarks of money. And so for people that don't know, the Lindy effect is kind of like this social phenomena, which is like the older something gets, the actual counterintuitively, the more resilient and the longer its life expectancy or its usefulness and its non-perishable chances, right? And so, for example, like gold has a Lindy effect of hundreds and hundreds and hundreds of years, right? Because everyone's like, okay, this has always been some way that civilization stored value, right? Lindy effect in terms of stable coins is much younger, right? Maximum only like a couple of years. But the idea is like the longer a stablecoin survives and stays at peg and never breaks its peg, the more people think that it's never going to break the peg, right? Versus if you have stablecoin where, at the worst times it breaks peg, which is exactly the times where people need to see it actually remains resilient, the chance of it surviving longer and longer actually decreases counterintuitively, right?
So this brings us to the infamous Do Kwon tweet, "By my hand, die will die." Did he underestimate the Lindy effect around that token?
Yeah, I mean, I can't really say exactly the specific view Doe had, but what I will say is I was actually on Bankless a while back when the 4-pool stuff was going on, and I actually said, for example, Frax has no issues with DAI or Maker. The main thing with the idea with Frax was we wanted to provide sustainable and growing yield in Curve in all of these liquidity pools. And for example, Maker is not interested in that. More credit and power to them. They seem like it was a good decision in the end, right? So they actually were right on. But in terms of what we want to do with making sure Frax has deep liquidity, a use for sustainable staking and LPing in Curve, Terra and Doe definitely saw the vision there. That's what they were trying to do, right? In fact, before the whole, UST DPEG and stuff, I actually think that Terra was trying to become more like Frax, right? When they were acquiring all of the Bitcoin, other L1 assets and things like that, they were trying to become a fractional algorithmic stablecoin, which is literally the concept that Frax invented, right? In fact, we named Frax, stands for fractional algorithmic currency. It's a portmanteau of those words. So I think Terra saw that, this is a more resilient model. If we could get our collateral ratio to something like Frax's, which right now it's actually quite high. It's almost 90%. It's gone anywhere between 82 as a low, and it's dynamic, right? It increases as market wants to see more collateral backing. It's able to dynamically adjust and go down as the money supply needs to expand, sometimes during high demand and things like that. I think Terra was trying to be more like Frax, except, unfortunately, I don't think they ever got their CR high enough, fast enough. So I think that our model is extremely resilient. We've shown that this actually does work. I think Terra was noticing that, and honestly, we were encouraging it because I think that's the correct way to go about it. You need a lot of exogenous collateral. You need a great deal of it. In fact, a lot of people say, well, Frax is like 90% backed. Like that's just the same thing as almost being 100% backed, right? So the danger is like very little. So isn't that not an algorithmic stablecoin? Well, the point is, yeah, Frax is quite young. It should be basically 90-something% backed or dynamically backed with a lot of collateral, because it cannot be this kind of fiat-like currency yet. It's only 17 months old, right? And so that's how we've been able to be extremely resilient and have a lot of these anti-reflexive, anti-bank run mechanisms. And honestly, Frax is closer to DAI in terms of how much hard assets and backing we have than a lot of the other stablecoin projects, right? In fact, the only similarity really we have with other algo stablecoin projects is maybe the name algorithmic in our name.
Yeah, it's very easy for journos and those on Twitter to dance on the graves of all algo stablecoins. And of course, that does a massive disservice to some of the very, very high level thinking that's gone into the design of some of these. And some of them should be treated as experiments. But I think you've built something that has shown, in the face of extreme pressure, It doesn't get much more extreme than what happened with UST, and it survived. So now you go into this next phase thinking, well, actually, what is the next worst thing that could possibly happen to us? And I don't really know how that happens, but like you pass the test, and that must have given you a huge amount of confidence in what you were doing and building has merit.
Yeah, and exactly. And, we're always trying to improve how Frax works. We're not saying, oh, we found the Holy Grail and now we just, sit back or anything. It's never a finished product. In fact, we, in this next growth phase of Frax and maybe in this bear market, who knows how long that's going to last. We've been building 24/7 every day. And we have this idea of kind of the trinity, which means that we have a slew of products that are tightly integrated with Frax called Frax Swap and Frax Lend. They don't have tokens. They're all governed by FXS, which is the Frax share token that also governs the stablecoin. And the idea is we want to build a full permissionless economy around the currency unit, right? Around Frax, which includes an AMM, right? Which is an innovative one with TWAMs and just normal, XY liquidity. We have a lending protocol.
I'm going to stop you there because when you say TWAM, everyone's going to be like, sorry, what? And it's the time-weighted average market maker, right? It's the thing that allows you to buy like little blocks of things over a period of time.
Yeah, exactly. So for example, Paradigm proposed this in like a theoretical white paper. We actually sat down around the clock and wrote the first full implementation, wrote a completely novel AMM that acts like UniV2, but also has time-weighted average market making, which is really, really good for protocol-owned liquidity, right? For pull, which is what a lot of stablecoins have, which a lot of DAO projects have. And so you're able to rebalance large amounts of collateral. You're able to make very large market orders over a prolonged period of time. People can also just use this AMM like Uniswap, right? They can LP, they can create any pairs, they can do anything they want. It's fully permissionless. It's the exact same thing as you'd expect from like Uniswap. And we're basically building a full economy and stack around Frax. And I think it's a very unique way to think about it because we're not launching a bunch of tokens, right? We're not just like here's a Frax Swap token, here's like a Frax Lend token or anything like that. It's all FXS as the governance token, which is the stable coin, the signerage / governance token. And the idea is in order to have a global currency on chain, you need to have the ability to create liquidity, be able to capture value for trading fees and liquidity against your pair and anywhere, as well as create debt denominated in your stablecoin, right, inside of your own infrastructure. The same way Maker has their CDP vaults and they're able to, create debt and DAI-based loans. We're going to have that very soon. And it's basically a full DeFi stack, right? And so when Frax deploys this to Ethereum, they can also deploy this to other EVM chains that we're working on as well. So you're going to have the full Trinity DeFi stack, which is lending, liquidity, and currency, right? Which is the stablecoin, which is dollar units. And I think that that's going to be the next, big expansion phase for Frax, and we've been building it around the clock.
Yeah, I think it's something that people underestimate is that if you look at the volume on Frax, like there's a massive spike during the UST depeg. And of course, that when that volume occurs, that's when you're generating fees, that's when you're generating revenue. But stablecoins traditionally, when things are good, they're very low velocity, right? They don't generate a huge amount of fees. So I guess for you, if you're thinking about scaling up, you have to find other ways for people to be spending the token or using the token within systems. And that must be quite a challenge for you.
Yeah, like the fundamental, three famous use cases of money, right? It's a store of value, medium of exchange, and the other thing is like it's a unit of account, right? And so what Frax has been so far is it's been a really good store of value because you can stake it in Curve, right? You can just hold it. It's a dollar unit, and there hasn't been an extremely large amount of trading pairs, right? It's not like Tether, which is like on all of these centralized exchanges. There hasn't been an extremely large amount of debt denominated in it, which is what increases the velocity of the stablecoin, right? As people are always repaying loans that are coming due, or people are taking out new loans and selling their Frax on loan, right, to buy other things. But once all of this Frax lend and Frax swap stuff is out, we're going to have all three fundamental use cases of money really going into hyperdrive for Frax, right? There's going to be a lot of trading volume, more and more debt denominated in Frax. We're basically solving all of the three use cases internally and having this entire stack where we can actually capture the value.
So I saw the governor's proposal, FIP 77. Do you remember what you said?
Is that the 20 million buyback? Yes.
So you're making $80 million in annual revenue, which is, I mean, it's pretty decent. I think you probably are anticipating a great deal more than that, but like, this is a pretty bullish thing. Like, you're going to propose to buy back $20 million worth of FXS using the TWAM.
Yes. And so, yeah. And so they just wanted to say exactly. So we want to do this. And the reason we did it exactly at this time, or we're proposing, and obviously it starts to pass governance, is because FXS has been, hit hard, just like with every token, but a little bit harder than most, I think, mainly because of, like you said, the stablecoin confidence has been down overall in the market. Everyone's kind of fleeing to like USDC, right? And things like that. And the important thing to highlight is it's not always good to buy back and burn your governance token if there is a better use case of the profits or capital dollar for dollar, right? You want to actually use your capital to increase your balance sheet, put it into growth, right? Do all of these things. However, if for whatever reason the market actually, misprices, according to us, the core team and the community, if it obviously passes governance, if your token is so mispriced or undervalued relative to other tokens that you could be accumulating on the balance sheet, then logically, by definition, the most useful use of dollar for dollar of every profit that you have is to buy back and retire those governance tokens, right? And we see that right now, we believe at least, right? Obviously not investment advice or telling everyone, go and buy it or something. But we think from all of the stuff that we're building and the way that we see the market and also how resilient that we know Frax is, we think that this is the best use of 20 million of protocol profits.
So you were talking before about the balance of backs to FXS in the collateral. Is that because the FXS token has dropped so much? I think it was like $38, $39 at its top, and it's, what is it now? It's around 638.
Yeah, so. And it's important to highlight, like, every token, including BTC, ETH and stuff, is down anywhere between 40 to like 80, 85%, and including other, DeFi tokens. But Frax is creating revenue, right? It's a resilient protocol. It's creating revenue. It's about to create even more revenue with much more lending activity and swaps, right? It's going to have its own AMM as Frax Swap expands, and we just don't think it's really the right thing to have the performance be like negative 80 or 75 from all-time highs. So that's why we proposed it, and honestly, I think the market kind of agreed, right? I think the last 2 days since we proposed it, I think the pricing has been up 20 to 30%.
Well, there's no more bullish words in crypto than buyback and burn. There's like, people go, oh, we're going to buy back and burn. I was actually, I was going to ask you specifically about marketing, because basically when USTD pegs, the whole sector you're in, not just your own project, is now under tremendous FUD, which you have to fight, even though it's not your fault. It's not the reason for it. You are infected by it. So I'm curious, from the Frax team, how have you decided to message this to people, and how do you talk to a Janet Yellen about your stablecoin and convince her that actually you've got something really innovative and robust here?
Yeah. So we actually have kind of a totally different kind of vibe and ethos than a lot of the, other projects that have like a really high marketing budget or a lot of, that they're really loud and things like that. The Frax team is actually only 8 to 9 core devs. Like the entire thing is just 8 to 9 engineers. We're technical. We write code and everything. We don't have a marketing team or anything like that. We're very DeFi focused. And yeah, you're right. There's a lot of FUD and talks and stuff like that. The way that we've always approached this stuff is we're not really interested in going on Twitter or like having kind of, debates that are around, like, believe us, this is the Frax is fine and all this thing. We're very, very transparent, on-chain, verifiable. So for example, one thing is like we've proven and we've shown Frax right now is impervious to a bank run. The amount of protocol owned liquidity that Frax has and locked liquidity and integrations and places where Frax is actually literally used, locked for many months, up to 3 years in our own staking and other protocols staking. All of this, if you actually add all this up and simulate what happens if every single person that had Frax just sold it into, the protocol liquidity or on Uniswap or on Curve or everything like that, Frax would not depeg. There wouldn't be a bank run on Frax. It's actually mathematically not possible at the current collateral ratio of like 89.5. And the good thing about being entirely on chain and decentralized and stuff is we don't need to actually talk to, like a Janet Yellen or like or a crypto, the drama on Twitter and stuff like that. We can just say, hey, you don't have to believe us, just verify it, right? Look on chain. Everything is public. Maybe we've made a mistake, go and verify it and make sure that our claim is correct. In fact, people have gone and looked at everything on chain, the amount of Frax that's actually in users' hands, and people have actually made a thread. There was a really cool thread by this Twitter user that I think they're Anon, so I don't really know exactly who they are. I think it's Ouroboros Capital. But they did this whole simulation that I already did myself. We do internally. And then they came to the conclusion that the collateral ratio could actually be a little lower. There's 46 million Frax that could actually be printed and expanded. And mathematically, it's actually impossible to have a bank run or depeg. So I think we've just been very meticulous about keeping everything on chain, not working with market makers off chain, not caring about, centralized exchange, like, relationships and stuff, which we don't really work on. We just let that naturally happen and things like that. And that's been really powerful, right? Just like Maker. Maker has the same kind of ethos. I don't think Maker does any kind of direct, relationship with like Jump or Wintermute or any of these market makers. So there's no value transferring off chain. Everything is in smart contracts. You can see exactly what you're getting. And that's just our marketing, right? Our marketing is just the tech and kind of letting it speak for itself.
It's Etherscan. Your marketing is Etherscan. No,
that's a great way to put it. I actually am going to maybe quote you on that on Twitter.
Yeah, it's funny because you go and look at these attestation reports for USDC or BUSD, and like you can be pretty sure that it is what it says it is. And then you go and look at the one for USDT and you end up going down this strange rabbit hole of Cayman Island companies and everything else. And it just doesn't feel right. And we covered all of this in a previous show. We were just trying to explain how you get to a point where you're confronted with a human being that has signed a document. And that's as far as you can go. But if you have the blockchain, you just go and look for yourself. And there is no office that you have to call up to get the paperwork. No, it's just there. And that's pretty profound. I had a question for you, which is like you probably earn most of the revenue comes from Curve, right?
Yeah, right now, especially after a lot of lending has like, collapsed across DeFi because there's not need for leverage, right? Which is where predominant amount of lending on Aave, Compound, and everything came from. Yeah, most of the revenue currently comes from Curve. I think once we launch Frax Lend with unique terms like there's fixed rate lending, variable lending, a lot of interest rate revenue will probably come back, especially because we're able to do dynamic terms on chain for that. But yes, currently it comes a lot from Curve.
So I guess the question is, are you setting yourself up in competition with Curve then, with Fraxwell and the kind of the extended capabilities?
No, that's a good question. I actually don't think so, because in fact, one of the biggest proposals we've had recently was this thing called the Frax base pool. And a lot of people are really excited for that because it's basically just a base pool of Frax and USDC, right? Which, the safest, the closest thing you could get to risk-free, if you obviously don't count Frax, if you're going to use it, it's obviously going to be have exposure to Frax itself. But other than that, it's just USDC. And the idea is any stablecoin that comes in pairs with the Frax base pool, right? Like we'll take MIM, for example, or FEI, right? If they create a pool of, FEI, USDC, and Frax, or MIM, USDC, and Frax, what we'll actually do is, because of that extra demand for Frax, we will actually return the revenue that we earn because of the increased demand for Frax that their pool is actually creating back to them. So actually, we've created this system with Curve and the Frax base pool proposal where if everyone kind of uses the Frax pool as like a liquidity shelling point, which is obviously great for Frax, but it's great for other people as the kind of revenue and the increased amount of signage from the expansions goes right back to them, right? And Frax doesn't ever have to be directly exposed to the esoteric risks of any of these other, stable coins. If there's like another algorithmic stable coin or MIM or FEI or something, they can just pair with Frax. As Frax grows, the amount of revenue that we get from the expansions just go back to those other protocols for creating that demand. So it's sustainable, it's isolated in risk, and I think it'll actually be a huge flywheel for Curve, right? It'll make Frax and Curve almost kind of like quasi merging in terms of this product, because we also proposed whitelisting Frax to stake VECRV. So a lot of the CRV that we earn from this will be permanently locked. So we'll actually start owning literally a piece of the Curve protocol. So Frax will be Curve, literally, right? Like we'll have direct ownership of part of Curve as we grow with it. So we're almost like trying to become Curve's meta stablecoin in a sense, right? Curve is like the stablecoin DEX of all of DeFi, but they don't have their own stablecoin, right? They can't issue their own stablecoin. They've thought about it. I think there's been talks of a CRV USD, but regardless of what happens with that, I think that a really elegant model is this Frax BP pool, and so we're very, very collaborative. We don't ever try to take market share or take pieces of the pie. We try to grow the whole, DeFi pie, so to speak. So I think there's no competition. There's no way that there's going to be any kind of value lost. In fact, it's going to be a lot of value gained in both sides.
Yeah, it's the funny thing about this composable business. Like, from the outside, it's just like, no, you're all in competition with each other. No, actually, no, we're highly compatible. They do this, we do this, and then we can plug it. And then this idea of a meta stablecoin, it's pretty cool. I got one last question for you. I don't want to keep you too long, but it's about the basket of assets that back the stablecoin. Did you? I lost track of the story, but did you ever bring in other assets into the basket to back the peg? Did that ever come to pass?
Yeah, we're actually, so we're exploring expanding it right now. There's a lot of Curve LP tokens, other LP tokens, which are partly stable coins, right? Like USDC, DAI, and things like that, which help resilience and lower volatility. We have some WBTC, we have some ETH, small amounts, but we're looking to increase that, especially during a bear market where those prices are down against the dollar, right? So it's actually a good time to increase those pieces with basically profits, right? Not with signage to take any kind of asymmetric risk, because like our job is to create extremely resilient, all condition collateralized and backed stablecoin, not to kind of try to time prices or anything, but it is a good time to actually increase the amount of ETH we have, right? As people and other projects, as I'm sure you've seen, are talking about selling ETH to keep the lights on. I think for really strong projects, it's a good time to acquire these assets at bargain prices in these market conditions. So yeah, we're definitely looking to increase it. We're also looking to expand the ability for Frax to have its own proof of stake staking service and be able to kind of issue a Frax ETH derivative of sorts, right? Like Lido does. And if we're going to have a ton of ETH, right? If we're going to have, tens of thousands of ETH, it makes a lot of sense to have Frax have the ability to have its own proof of stake validator infrastructure, issue one-to-one, a Frax ETH derivative, kind of like Steth, right? And have that back Frax and create this very valuable infrastructure. Like I was saying, this economy, this full stack economy that runs on this dollar currency, right? Called Frax.
That's wild, man. Like how did we get to this point where you can come up with stuff like that for a stable coin? I mean, how cool is that? You must have a lot of fun kind of dreaming out ways to use the power of what you've created to do these things. And then I guess you go, oh, but should we do this? Are we introducing risk here? It must be a fun time figuring that stuff out.
Yeah, I mean, it's basically what I do all day, just because I like to figure out exactly what's going on in the industry. I've been in it for 7 to 8 years, right? It's not my first rodeo. It can kind of start telling patterns and cycles and what innovations are coming. But it's also something that I think sets us apart from most other projects is we don't do a lot of this stuff for the fun of it, right? We're not like, oh, this feature would be cool. Let's build it. What we do is we think of this whole thing as kind of a grand chessboard, right? And it's like, what do we want stuff to look like a year or 12 months, 18 months in advance, right? What is it that we're building towards with like a very coherent vision, and how do we incrementally get there? We're not like thinking, oh, it's so cool to have a staking service like Lido. Why don't we do that? I bet you that'll get some profit or something. How we're thinking about it is, we're building a full stack economy, right? If we're going to have liquidity, lending, and currency, the last frontier of that is the actual network that you're participating in, right? The block space, Ethereum chain or other chains that we're going to be in. How can we also own that? How can we own a piece of that and participate and have the Frax economy be one of the largest consensus forming, shelling points of that actual chain, right? And so we're able to capture the value of those transaction fees and the Frax economy that we're creating for ETH, because we're going to own a piece of the staked ETH, right? And then we're going to be able to hypothecate it as a staking derivative, right? Just like Steth and things like that. It's all, if we can execute it, which is the big if, right? That's the actual $1 trillion question, is if we can actually execute this coherently, I think that we'd have a pretty nice checkmate in about 12 to 18 months. Yeah,
that's pretty exciting. I had no idea you were going in that direction, but it makes total sense. Did you ever look at real world assets? Because I know you were thinking about it at one point to bring them in. It feels like a terrible time to start doing that now, though.
Yeah, it might be a terrible time to take a lot of those real world risks, but it's a good time to actually start building those relationships and starting building the infrastructure for when things turn around, right? So we've been working with Goldfinch, TrueFi. The Centrifuge guys actually just posted a governance proposal officially literally 48 hours ago, talking about how we can do some real world lending through them. And yeah, the market conditions for those obviously is quite difficult right now, especially with heightened interest rates, the risk of all these things defaulting and how that could actually affect the peg. But I actually agree with a lot of the maker guys on real world assets. And the idea behind it is, if you're going to have debt denominated in your stablecoin, you don't want it to just be for leverage, for degen kind of a gambling during crypto bull markets, right? You need the actual stablecoin to be able to issue credit and debt for actual valuable economic activity, things that humans care about, making solar panels, making cars, food, all of these real world assets, technology, these kinds of things, so that there's actually a real use case for DeFi to make the real world a better place, right? And so if Frax and Maker and these things are ever going to scale to literally trillions of dollars of supply in the next couple of years, there's going to have to be real economic lending in the real world. So we're exploring it actively. Hopefully it becomes a less risky endeavor with a better macro market. But yeah.
Well, I'm just looking at your statistics now. You topped out at 2.47 billion in TVL, but it's like 1.32 billion. I mean, you're not doing badly, not at all. It's kind of remarkable, really. And like, maybe we just need to find a new way of describing what you are. Maybe we just put the word algorithm in the bin. You're just a stable coin, and that's enough.
Yeah, I mean, I think that the word algorithmic stable coin has gotten a bad rap in the market. But I think that, like you said, our tech and what we're doing with our vision speaks for itself. I actually, now that we're talking about the definition of like an algorithmic stablecoin, I think everyone agrees that the old definition, that doesn't work, right? Like the fact that you have this volatile governance token and you try to stabilize the stablecoin with just this other token you created out of thin air, essentially, right? And the whole point with Frax was that our premise was exactly just that doesn't work. That's why we introduced the idea of, look, you need to have a lot of exogenous collateral and only be a very, very small amount algorithmic that you've actually built Lindy and built confidence. And that might take years and years, right? But it's going to have to be predominantly, almost entirely backed by hard assets. So I think I agree with you. I agree with you entirely that the old definition of algorithmic stablecoin, it's time to retire that, both as an industry, but also Frax has tried to retire that from the beginning, right? With our whole premise.
Yeah, there's always a lack of nuance, isn't there? And like when you talk about Lindy effect, Bitcoin, it's almost like an insult that Bitcoin is only around because of its Lindy effect. But I think we can see now that that's far from being the case. There is never been a greater need for hard money the way there is now. And I guess my last question to you is, what's your prognosis for the US dollar? If you're a US dollar denominated stablecoin, the US dollar itself is in a strange place right now. Where does all this go? How does it play out? Because it's almost like we're seeing the dismantling of money as we know it, and something else is going to grow up in its place. But I'm curious if you have this kind of vision of what's going to happen with fiat currency and anything else.
Yeah, I agree. And in fact, the other thing we're slowly working on, and some people that are listening to this might be familiar with, is the Frax price index, which is the only other stable coin in the Frax economy, which is pegged to the CPI, right? The basket of consumer items, which basically makes it currently an inflation resistant dollar, right? And so I think that the current unit of account of the entire world is the US dollar, right? 80% plus of trade is denominated in it, and most debts. However, if there's going to be a successor to the US dollar in terms of currency units, right? It's going to have to be something that's a self-sovereign peg, like the FPI or some other stable coin that has a stability to a basket of assets that humans care about, right? And I always say this, and I think it's a good way to end it, but there's $3 trillion narratives in crypto, and I really believe that, which is Bitcoin, right, and Ethereum, and the last one is stable coins, right, and whatever kind of stable coin, maybe 1 or 2 or 3 that end up taking the mantle as crypto's unit of account. And we're really thinking Frax and the FPI is one of those, and Bitcoin and Ethereum are the first $2 trillion narratives.
Well, it sounds like it may not just be one, but it may be a bunch of them that are kind of grouped together and are resilient and offer different things, but can be collectively called crypto stablecoins. But definitely going to be, excuse me, it's definitely going to be a very interesting time seeing all this play out. I wish I knew what was coming, but I really don't. But I know it's going to be exciting. That's for sure. Well, listen, Sam, thank you so much for joining me on this chat. It's been really enlightening, and I feel like I have so much more homework to do on Frax to really understand it. But I'm hoping that people who are listening feel a little bit more courageous about algorithmic stablecoins, or whatever we choose to call them now, because like you, I see a bright future for the concept, if nothing else.
Yeah, thank you for having me. And we're always on Twitter, Telegram. I'm there all day and really approachable. So reach out if anyone wants to get involved. And it was a pleasure.
Thanks so much, man. Speak soon. Cheers.